Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had 2 directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking out Facebook on the daily and weekly time frame. So another open at the high of the day, and then we saw some pullback, and that happened on Thursday and again today. And on Friday, we saw an upper wick of weakness. So the past 3 days aren't really giving confidence to the bulls, but giving them some credit, they are still holding up. We had the low of Friday, 133.68, and we held that level by 2 cents today, but we did defend the higher low pattern on the daily time frame. So it's an inside candlestick on the daily. We are going to see a break tomorrow, and we're either going to see a bullish break of 130.70 and a move to the all-time high of 135.49, or a bearish break of the higher low pattern, 133.68, and then we'll be looking down to the daily middle Bollinger Band support. On the weekly time frame, we can see that inside candlestick on the weekly, and we haven't broken that to the upside yet. We're forming our second weekly inside candlestick in a row at this point, as the range continues to tighten right on the verge of that all-time high. So looking on the shorter term time frames for Facebook today, we can see that weakness right out of the gate, where the S&P 500 in the first 15 minutes was all bull and Facebook dumped. So Facebook, the high of the day right at the open, and then we pulled back and we rejected from these exponential 5-minute moving average resistances all morning, and then we hit the low of the day around 11 a.m. Now, how do we know when the trend was changing for the bulls to show up on this bounce? Well, we had our low of the day, lower high, higher low, lower high, lower low, so the bear's still in control. Still another lower high as we couldn't break the high of this bounce attempt. Now we have our higher low, and there's our higher high. And again, it's the 20-period 5-minute moving average acting as a little guideline as well. So once that became support, we broke the lower high pattern. Then we back tested this 20-period 5-minute support. Look how many times that level held. We held it 1, 2, 3, 4, 5, 6, 7, 8 times. All the while, the bulls went from, let's say you got in the worst entry on this candlestick. That was up at 134.10. That would have been a pretty poor entry, but if that was your entry, hour and a half, 2 hours later, we're up at 134.50, and you're definitely getting a small amount of profit. Certainly not a home run, but if you want to do trading long term, you're looking for base hits, you're looking for small wins to add up, and not just swinging for the fences going for home runs. So there was a nice little break of that lower high pattern. The exponential moving average resistances became support, and we saw a bounce from the low of the day down at 133.70 up to 134.50. So then we did pull back again by the afternoon, seeing a bit of weakness, which is what has that daily chart looking so close to a bearish break. Hourly time frame, the 20-period moving average is back as resistance, and if we break that low of 133.70 and 133.68, we're looking at the hourly. The 100-period hourly will come first in the low 133s, and then that daily middle Bollinger Band will be in the mid 131s. So we do have a couple hourly moving average supports to be watching before that daily middle Bollinger Band, and that will be the first level we look to. So inside candlestick on the daily time frame, clear break is coming tomorrow, and we'll see which direction it breaks in, currently favoring the bears with a slight edge because of the weakness we've seen the past 3 days. Thanks for watching. We'll see you tomorrow.